If you had 100K land in your lap, how much income could it really generate? Today, we're putting that question to the test with some of the highest yielding ETFs in Canada. Hold on to your seatbelts, folks. This is going to be a good one. This is the next video in my Windfall series where we break down 3 different ways to invest a sudden $100,000. Income, dividend growth, and of course a hybrid growth and income strategy. Last time, we explored the hybrid approach, blending the best of both worlds with growth upside and a healthy dose of income. Today, though, we're flipping the script a wee bit and we're going all in on income. The income strategy, it's about maximizing your cash flow. Instead of chasing future dividend growth or capital appreciation, this style is laser focused on turning your $100,000 into the highest possible stable stream of distributions you can enjoy, right now. With income ETFs, you're looking at enhanced yields through covered call overlays, sometimes leverage, and a heavier focus on consistent cash flow. The trade-off is that you may give up some long-term growth potential, but in return, you get some steady, reliable cash flow. When it comes to building an income-focused portfolio, not all ETFs are created equal, that's for sure. To make sense of the options, I like to break them into 3 categories: core income, enhanced yield, and speculative income. So if we look at core income, so this is the stable core of the portfolio. These are income ETFs with a proven track record, combining solid yields with some very, very modest growth. They may not have the absolute highest payout, but they're bringing reliability to the table. The kind of funds you can depend on year after year. Think of this category as the foundation that keeps your portfolio steady. Now, in regards to enhanced yield, oh boy, these ETFs, they push harder for income, often by using more aggressive covered call strategies or leverage. The yields are higher than the core category, but they give up more growth in exchange. They're designed to boost your cash flow, but at the same time, they do come with added risk. This is your booster pack for your portfolio, giving you that extra punch of income. And that leads us to our last category, the speculative income. These are newer funds without a long track record. On paper, they look pretty darn good. High yields, innovative strategies, sometimes even payouts more frequently than monthly. But without a year of performance history under their belt, they're still unproven. I look at this as being the wild card section of the portfolio. They could become stars, or, oh boy, yes, they could struggle. Of course, I'm hoping for the stars, not the struggle. A sub to the channel is the struggle-free way to enjoy future content. For this Windfall portfolio, I'm going with a balanced approach. 50% into our core income ETFs to build a steady foundation, 35% into enhanced yield ETFs to boost that cash flow, and then we'll hold on to that last 15% and we'll use that for our speculative income category. For a bit of a small wildcard allocation, this mix, it keeps the portfolio reliable while still chasing higher payouts and leaving just enough room for new funds with potential. So, without any further ado, let's do this. We will begin with our core income ETFs. We have allotted 50% for our core, and once again, the purpose of these ETFs is to provide solid income on a more proven track record of at least a year or more. These, like I said, these are the foundation of this portfolio. I have selected 5 ETFs that will make up our core. We will begin with the Hamilton Enhanced Multi-Sector Covered Call ETF, ticker HDIV. This ETF brings us strong Canadian exposure via underlying ETFs, and they also do employ up to 25% leverage to really help enhance their returns. Now, their yield coming in at 10.52%, so it's a monthly dividend of 17.3 cents per share. Their 1-year total return, and I said we're going to see some modest growth, they're actually doing pretty good, 25.59%. So for HDIV, I'm going to add 638 shares for roughly a 12.5% share of that total portfolio. So that's gonna ring in at $12,498.42. That leaves us $87,501.58 left. Up next, and oh boy, we've been seeing these two together a lot lately. We've got the Hamilton Enhanced US Covered Call ETF, ticker HYLD. Like HDIV, they also use 25% leverage, but they are highly focused on the US side. So those US equities, their current yield coming in at 12.02%, monthly dividend 14.7 cents a share, and their 1-year return on investment 18.52%. So this one here, I'm going to add 866 shares for roughly a 12.5% share of that total portfolio. That, ding ding, rings up to $12,487.72. That leaves us. We have $75,013.86 left. Let's see who we're going to add next. It's going to be the Global X Enhanced All Equity Asset Allocation and Covered Call ETF, ticker of EQCL. This ETF, it's not only about income, but it also brings diversification to the table. As well, it invests in a broad array of global equities. It then uses covered calls and leverage to produce a respectable income. Their current yield at the time of recording, 11.27%, monthly dividend 22 cents per share. On that 1-year total return, 18.31%. So for this one, I will add 540 shares for roughly a 6.25% share of the total portfolio. So that will cost us $12,490.20. And that takes our total down to $62,523.66. Next, we will add the Evolve Canadian Banks and Lifeco ETF, ticker BANK. This ETF is going to give us some good exposure to Canada's most resilient sector. And with covered calls plus leverage, the income is pretty darn good for sure. The yield on this one, 15.03%, monthly dividend of 11 cents per share. Their 1-year total return, 28.15%. That looks pretty darn good. We will add 274 shares for roughly a 6.25% share of the total portfolio. So that is going to cost us $6,269.84. And that leaves us $56,253.82 left. That takes us to the Global X NASDAQ 100 Covered Call ETF, ticker QQCL. This ETF gives you some great exposure to the NASDAQ index, where, of course, technology thrives and perhaps your income as well. They have a yield of 13.26%, monthly dividend 29.5 cents per share. Their 1-year total return, 25.72%. So for this one, I will also add 254 shares for roughly a 6.25% share of the total portfolio. So that's going to cost us another $6,253.48, leaving us, after we leave this category, $50,000.34. We will now move to our enhanced yield category. And we do have another 35% of the portfolio to be allocated in here. That works out to $35,000. This is where we push a little harder for income. These funds lean into higher yield strategies, whether that's a little more leverage, some sector concentration, or enhanced covered calls. The trade-off is usually less growth and more volatility, but the cash flow, well, it can be very attractive. So for this category, I have selected 3 ETFs. We will start with the Harvest Diversified High Income ETF. Yes, we're talking about HHIS. This ETF holds all of the other Harvest High Income Shares Enhanced ETFs to give exposure to the largest companies in U.S. tech as well as a couple of others to broaden the diversification a wee bit. Their dividend yield coming in at 22.87%. It is a monthly dividend of 29.5 cents per share. On their 1-year total return, 23.92%. That's not too shabby. And we're going to add 1,144 shares for roughly a 15% share of that total portfolio. So that will cost us $15,009.28. bringing we have $34,991.06 left to allocate. Up next, we're going to bring in the Evolve European Banks Enhanced Yield ETF, EBNK EBank. This ETF holds a well-diversified selection of European banks, and they then add some covered calls and leverage to make your withdrawal a wee bit bigger. They have a yield of 11.98%. It is a monthly dividend of 14.5 cents per share. Their 1-year total return, this is a nice one, 46.97%. So we will add 860 shares for roughly a 12.5% share of that total portfolio. This, of course, rings in at $12,495.80, leaving us $22,495.26. And finally, for this category, we are going to add the Harvest Bitcoin Leaders ETF, ticker of HBTE. So this ETF provides exposure to Bitcoin and the companies in that Bitcoin ecosystem. It may have the most volatility in today's list, which is actually not a bad thing for covered calls. Their yield is coming in, it's a nice one, 19.50%, and their 1-year total return, 75.71%. Holy banana bread, that's nice. We will add 369 shares for roughly a 7.5% share of that total portfolio. That, of course, is going to cost us $7,494.39, bringing us down to $15,087. For our final category, we are moving into the speculative income category. These are the new kids on the block that may very well become future staples. But for now, they're still a little green behind the ears as they deliver some green to your pocket. I have 2 ETFs for you in this category. We will start with HHIC, so the Harvest Canadian High Income Share ETF. This one, of course, provides exposure to Canada's high dividend payers with a covered call overlay, boosting yield and delivering reliable monthly income. They have a yield of 15.05%, monthly dividend of 16 cents per share. Their 1-year total return, 6.33%. Yes, that's really low, but they've only been around for a month and the first dividend hasn't even dropped yet. It's dropping in early October, so take that with a grain of salt. I will add 588 shares for roughly a 7.5% share of the total portfolio. That's going to cost $7,502.88. Leaving this portfolio $7,497.99, and that's going to be gobbled up by S-Day, so the Hamilton Enhanced U.S. Equity Daymax ETF. This is one of the new 0 days to expiry ETFs, which enables them to drop dividends twice a month thanks to their ultra short-term option strategies. Their yield is coming in at 17.79%, and it is a twice a month dividend of 18.1 cents per share. I will point out, when they launched, it was only 18 cents, so they've already seen a dividend increase. Very nice. Their 1-year total return, 4.76%. Now, guys, once again, take that with a grain of salt. They've only been around for a few months with, they've had 4 dividend payments so far, but they've only been around for a few months. For this one, I will add 307 shares for roughly a 7.5% share of the total portfolio. That's going to cost us $7,496.94, leaving us left over $1.05. Last time we had enough for a coffee. This time we have enough to buy some creamer to put in our coffee. So that is our income portfolio. And now the big question is just how much income will it generate? Let's start with the dividends. Provided we do not see any changes, this portfolio will generate about $15,326 or $1,277 a month. Growth is, of course, in itself not so important for an income portfolio, and honestly, almost impossible to speculate on. If the next year were to completely mirror the last year, which there's pretty much a 100% chance it won't, then you are looking at some big numbers. In fact, you would be looking at a growth of 15.4% in the portfolio's value. Your $100,000 portfolio would then be valued at $115,402 and, well, 27 cents. With that being said, I would temper your expectations big time, as I still have a hard time believing the market can keep this pace up for another year. But you never know. Okay, so that is our income portfolio. Next time we will do it all over again with the dividend growth portfolio. I can't wait. If you are interested in any of these ETFs that we looked at today, don't forget to put in a whole heaping helping of due diligence before you place any of your hard-earned money on the table. Let's continue that learning journey. Check out this video on the growth income portfolio. Thank you for watching, and I will see you in the next video.